The topic for today is general ledger. The first question asks you to complete the sentence. The general ledger is based on a rule which states that the general ledger is based on your double entry rule, and that states for every debit entry there must be an equal credit entry, your double entry rule. Question 2. This is quite a long question and it counts quite a lot of marks. It asks you to do the trading stock account and balance it, and to do the debtors control account but don't balance that one. Now I'm going to work through these transactions and do the trading stock and debtors control account simultaneously. I don't want to look through the transactions to find trading stock first and then do the whole lot again looking for debtors control. Okay, so let's start with the transactions here. The first one here says cash sales for the month was 17,200 and the cost price is 10,000. If you sell stock, stock is leaving the business, so trading stock is going to decrease. Remember your trading stock account, if stock comes in, it goes on the debit side. If it goes out, it goes on the credit side. So that cost of sales entry from your CRJ will go on the minus side. Invoices all for trading stock were issued and were received, and they give you the markup. Okay, if we look at the invoices issued, it means we've sold on credit. If we sell on credit, the debtor is going to owe us more, and the contra account for that is sales. So you add to your debtor's control account because we've sold. At the same time, we're going to record the cost of sales, and the markup is 50%. Remember, to calculate costs of sales, you take 48,000 divided by 1 point markup, 1.5, and you get 32,000. What I suggest you do with these ledger accounts actually is to get the amounts on the correct side first. Once you've done that, then worry about the details that you need to write. So if we've sold stock, stock is leaving the business, we put the 32,000, and that is your cost of sales figure. And then they also told you that you received invoices for stock purchased. If you receive an invoice, stock is coming into the business, and because we bought that on credit, it was an invoice, your other account that changes, your contra account, is creditors control. Okay, the next one, stock costing the business 3,100 Rand, which had been sold for 4,600 Rand, was returned, while stock was returned by the business. Let's start off with the stock that was returned by your debtor. First things first, if the stock is returned by the debtor to the business, trading stock is going to increase by the cost of sales figure. The amount that the debtor owes us is going to decrease on the minus side, 4,600, and that is because of debtors' allowances. And then the stock that we returned, that's this one here, is going to leave the business, so it's on the minus side. Your details will be creditors control. You would need to decrease your creditors control because we returned stock. Okay, then EFTs for 27,800 were received from debtors in payment of their account, and in addition, discount was granted. If the debtors pay you back, that's going to decrease what they owe you, as well as their account will decrease by the discount. So both those two amounts are going to go on the minus side of debtors control. The 27,800 was the amount of money received, so that will get recorded as bank, and the 2,200 was the discount that you allowed to your debtor. Okay, the next one, stock purchased by EFT. If you purchase stock, stock is coming into the business, and because you paid for that stock, your contra account there is going to be bank. See, this one here we bought on credit, was creditors control. This one we're paying for, so the details are going to be bank. Then carriage on purchases of stock was paid using petty cash. remember when you record carriage on purchases, it goes directly into the trading stock account because it increases the cost price of your stock. But because we paid using petty cash, this entry here is on the plus side, 800, but your contra account here would be petty cash. Then the following transactions appeared in the general journal. Stock costing 5,000 Rand was destroyed in the flood. So the first thing you need to decide is stock going up or down. If stock's been destroyed, it's obviously going to go down. And then you have another account here called loss due to flood. If it was a fire, it would be loss due to fire, and so on. Then the owner took stock for own use. If the owner takes stock, stock is going out of the business. So on the minus side, 980. And because the owner took it, your details are going to be drawings. Equipment costing 200 Rand, which had been returned by the business, was posted to the trading stock account. Okay, so what we did was we decreased trading stock with that 200 Rand, but we actually returned equipment. So because you decreased trading stock in error, you're going to need to add back to trading stock. And the contra account there would be equipment. In the equipment account, that would go on the minus side because that's what is being returned to your supplier. And then they give you your debtors control columns in the general journal. This is straightforward. The debit goes on the debit side of debtors control and the credit goes on the credit side. So you put the debit on the debit side, 2760, and the credit on the credit side. And remember, there's lots of different things that can make up this 1280, so you call it sundry accounts. Likewise, this 2760 is also sundry accounts. We were then asked to balance the trading stock account. By now you should be able to balance accounts easily. You add up the plus side first. You take the total across to the other side. To get this balance carried down here, you subtract all these numbers here from your total. That will give you your balance, and then you bring the balance back down to the plus side. That is the value of the stock that you've got on hand at the start of the new month. Debtors control, we were not asked to balance. Okay, then if you have a look up here, the second part of this question, they ask you to refer to the creditors control account and answer the questions. First thing you have to answer here is find two errors in the creditors control account. Okay, so if you have a look at this creditors control account, let's just go through some background info quickly. Creditors controls the liability, so it's minus plus. You need to scan through here and see if you can see anything that's wrong. Bank CPJ, we're paying back, that's right. Discount received, CRJ, that is wrong. Okay, the discount is recorded in the cash payments journal. And then here it says creditors allowances. When you return stock or equipment or stationery, there are lots of contra accounts for this amount here, so you don't write creditors allowances, you call it sundry accounts. So the first error was a 430, the details should have been sundry accounts. The 5,000, the folio should have been CPJ. The next question asks you for the purpose of the creditors control account and how it assists in internal control. The purpose is to show the total amount owed to creditors, and we can use that balance because that balance must then equal the total of the creditors list. So when you do your creditors ledger, at the end of the creditors ledger, you list all the people that we owe money to. If you add that up, it must be the same as this balance in your creditors control account. And if not, then errors have been made, and then you can correct those errors, and thereby you've got better internal control. And then the last question here says, I have to scroll a long way, sorry about that. Identify one possible transaction which could have taken place to give rise to each of the following. They're both general journal, the 1,000 Rand and the 2,000 Rand. So the R1,000 here, entries that go in the general journal for to do with creditors on the debit side can only be correction of errors. So maybe we charged, not charged, maybe one of the creditors we recorded the amount as too much instead of too little, or too little instead of too much, whatever the case may be. So this is just going to be a correction of error. We are decreasing what we owe the creditor. So in that case, we said we owed the creditor more than we actually did. This one here, the most common thing here is if the creditor charges us interest. On the plus side of the account, remember creditors is minus plus, so the most common thing here would be your interest. You could also have a correction of error here. In this case, if we're adding back to the creditors, it means we decrease creditors by too much, and we're adding back the extra. So for those two there then, the first one I put correction of error, and the second one I put interest charged. Okay, once again, these questions can be asked in different ways. In this case, they asked you to do the trading stock account, they asked you to do the debtors control, then they gave you the creditors control and asked you questions on it. You can have any combination of that. So maybe they'll give you a trading stock account and ask you questions. Okay, instead of actually asking you to draw the account up. They might ask you to do the creditors control instead of answering questions and so on. So basically be prepared for anything.